Steve. Scott,
Hello.
how's it going?
Good, thank you. Good.
Happy Monday to everybody. Thanks everybody for taking the time to pop in here and hear what we have to say. We know you guys are busy. So without further ado, today is June 18th. June is already halfway behind us. Seems weird. All right, but welcome to another edition of the Office Hours. Before we get into the good stuff, just want to take a brief moment here to quickly run over the disclaimer and make sure everyone in attendance knows that the information that we share in this webinar or any other webinar that we do throughout the week is for educational purposes only. If you do need investment advice, what to do, when to do it, all that good stuff, please seek out a registered investment advisor or a licensed Series 7 stockbroker or some other type of licensed individual that can help you out with that stuff. All right, I think that'll make the lawyers breathe a bit easier now. Before we get on to the itinerary for today, looks like we've got a lot of regulars in here, but there are some people in here probably that have not had exposure to maybe these webinars or the community that we've built around the technology that is the scanner. And of course, today is Monday. You got myself and Steve riding shotgun, but take notice right up here of the Traders Room. Hosted by Barry Anderson, who opens the trading room every morning 30 minutes before the open. So it's a great place to get in there and see Barry using the technology, showcasing his trading style. He does a great job in there, and the room continues to grow. And the best thing about it is the price. It's free, all right? And to get something comparable to Barry's trading room, you know, if you shopped around, you've seen the rooms, the other alternatives that are out there, they're not cheap, okay? So once again, we make this available to our users and pretty much even non-users at a cost of zero. So keep that in mind and make use of that resource if you have not been taking advantage of it. Of course, on the weekly 5 o'clock webinars, Steve takes the helm on Tuesday for the trade of the week. Hump day, good old Wednesday rolls around. We like to change it up just a little bit. We bring in Dan, our CEO, along with Brad, our CTO. Always interesting take on the technology from those two. And then Thursday, Andy rounds out the 5 o'clock Eastern webinars with the Trading Studio, and I ride shotgun. And then we wrap everything up with Friday, the support session that starts at 8 o'clock Pacific Standard, 11 a.m. Eastern Time. It can go anywhere between 2 and 3 hours depending on the room. And that's just kind of a free-for-all. Anything that you need help with TI related, that's what the Friday support webinar is. So come one, come all. Got a lot of good feedback on the Friday support session thus far, and can only assume that we'll continue to do that one in perpetuity. Now, in addition to the 5 o'clock webinars, we've also begun the TI University webinars. Monday through Thursday, they start at 9 o'clock a.m. and typically go for an hour and a half. Beginners 101 on Monday, 201 on Tuesdays, 301 and 401 on Wednesday and Thursday, respectively. So throughout the whole week, 9 different webinars that you can attend, learn at different levels, whatever your pace or whatever level you're at, we've got something for you. And just a peek to show how the introduction of AI has impacted our user base. And of course, this is looking back at January 2016 when we first introduced the very first AI. And I'm sure most of you sitting out there already know we've added 2 additional AIs as well. So where there was 1, now there is 3, and the trend continues. Now, before we move on here, just want to make sure everybody is aware of the fact that we put out a free ebook not too long ago. Myself, Steve, Andy, and Sean all contributed to this book. And today, you know, with the action that we had, it was pretty applicable. Right here is where we released it. And of course, everybody knows what's happened since then. We're starting to find our range and test the tops again. But today was a little bit on the red side. So the things that are showcased in the book here, some of those techniques came into play today. And of course, if you've already read the book, you're already prepared. If you haven't done so, all you have to do is go to this address right here, download it for free. It's a lot better to be prepared and not need it than to need it and not be prepared when that market finally turns. When and if that day does come, I guess it's not a matter of if, it's just a matter of when. We just don't know how long the quote-unquote bull market is going to be with us. But if you haven't done so already, familiarize yourself with the techniques in this book. It's sure a good thing to have in your arsenal. All right, getting on to the good stuff here. Of course, we're going to let Steve talk about the market and what happened on the broader indexes today, or the ETF tracking funds. We'll get into kind of the expectations that were presented to us at the beginning of the day today. And I guess the best way to describe it is there was something for everybody, longs, shorts, but it sure wasn't that easy to get your to get our hands around the direction of the market today. And we'll get into that a little bit more in detail. So I guess it's a good time to pass it off to you, Steve. Let's take a look at the bigger tracking ETFs and the kind of interesting action that we had today. So I'll just pass it along to you.
Let me just get my Deadpool crayon drawings off the screen here.
Unicorns.
And yeah, you're right. Speaking of that book, I like the way you said that. It's better to know it and have it than to not know about it and need it. Kind of like the King Stallman bond guy here in town who will get you bail bonds. Better to know me and not need me than to need me and not know me. That was a good way to put that. All right. Hello, everybody. Happy Monday. Welcome to my desktop here. I got a big daily chart open. We're going to look at a few things market related. First thing that comes to mind is we're in that goofy market environment where we go down on green candles. Isn't that fun? But it doesn't matter what color the candles are. Point is, I was kind of asking last week for some sort of a pullback in price, some sort of a consolidation, be it sideways or even pullback in price. And that seems to be definitely what we're getting in the bigger picture here of the S&P 500. And we kind of tagged some levels of interest today. I mean, you guys that have heard me talk about this know I try to keep it really simple with horizontal pivot lines, whereas like right here as an example, selling then became support. So pivot lines are lines in the sand that were once resistance that currently become support, or vice versa, once support currently become resistance. So with that said, we have a little range last 2 weeks back here, and it looks like the high end of that range is slowly coming into play here, but just above that range, that orange line is the red line, which is the S&P, which is the simple moving average, the 20-day SMA. Very popular, very commonly used moving average, the 20-day simple moving average. And we bounced off of that, at least on the gap down, hit that number, and then kind of traded back up for the rest of the day, which gave us these green candles, which is kind of funny. Back here, we were moving higher on red candles, but now we're moving lower on green candles. So a little goofy. That's what happens when we have major overnight gaps up or down. It doesn't really matter where the market starts up, it just matters where we finish up. But again, back to what I was asking for, a nice 3-day pullback is really what the doctor was kind of ordering, and I think that's what we have. So now we're in the level here of, can we build a higher low or a higher base camp to come back and assault, once again, pivot levels. This is a resistance level back here, a level of supply, and we would expect sellers to be laying in wait at these levels again. If we can take out the recent highs from last week, we're right smack in a line for a date with that orange line again. And if we can clear through there, well, the only thing really left is this little mountain peak here that's kind of sticking out through that line that we had going back in January. Before we had the real volatile February and March kind of develop. So if you were with me last week, I had some minor trend lines being drawn to the downside, but we have worked ourselves out of that wedge completely, and we seem to be wanting to move higher prices. At least that's what the footprints in the sand are telling us here. We're just trackers of price action. We can get caught up in what Goldman Sachs thinks or what CFOs tell us on CNBC. But you probably shouldn't do that. You should probably learn how to monitor the footprints in the sand and let the price action tell us what's happening. So higher low. Today could be the beginnings of another higher low, which is basically the anatomy of a simple trend. So we don't run out of too much steam after 10 days in a row to the upside. We need a little breath. Market action needs to breathe. So what would happen Friday and today is perfectly healthy as far as I'm concerned, but going forward, this is where we're going to need to dig in a little bit. And if we go over to the Qs, the NASDAQ is stronger, relatively stronger, because we have already taken out the all-time highs back here. And I redrew this orange line to basically show the resistance of these 2 days, the red and the green candle back here on 6.7 and 6.6 respectively. A little bit of a pullback of 2 days, and then look, it went and assaulted those new highs and pushed back. Well, now this line is starting to act like a pivot line again. A resistance back here, but as we pulled back, we traded through it today, but reclaimed it and closed above it. Again, my interpretation is the intraday stuff can do what it does, can throw elbows, make some noise, and leave some bottoming wicks. But as long as the closing price is back above, the area of interest, in this case, this pivot line, this satisfied a decent 2-day pullback and tested that pivot line. If we move higher from here, let me just rephrase it, there's a good chance we might be able to build off of today's move. A very shallow pullback, but again, shallow because this market is taking off. Not only do we have new people coming in and starting to gain confidence again, we have the short sellers who are throwing up their arms like Charlie Brown in the football. Got pulled once more, again, from Lucy, and those shorts are covering. I'll talk tomorrow night a bit more on the trade of the week. That's the focal point of the methodology this week, short squeezes, trying to find other people that are in pain and use that as our opportunity for extra confidence, knowing that short sellers that are moving higher have to squeeze higher. And I think that's showing up a little bit in the NASDAQ and the Qs in general. The market was setting up really nicely for a possible break, which we never got. And so if you're still stubbornly waiting for that market to get back down here so it can break again, you're not listening to the tea leaves and what the market action is telling you. Market action is telling you for the last 3 or 4 weeks, we have broken out of that downside trap, and the price action does want to move higher, which takes us to the incredible Russell 2000. We closed at all-time highs today, pretty much all-time highs. So if anybody's out there shorting the IWN, the Russell 2000, there's not a single human being in the money. So that's got to kind of tell you something too. Again, if there's still shorts being squeezed out of this market, there's some more ways to go. But it appears that the interest is lying in the small caps. The NASDAQ's looking good, but the Russell 2000 is looking better. Hardly even a pullback. I mentioned last week we can have pullback, we can have consolidation and pullback in price. We can have consolidation in sideways action over time in price. And that's kind of what happened here. And that's the strongest of the 2 consolidations we want to see. A really nice gap up higher and a week and a half of trading, and then 4 days of sideways action, and then coming into today, busting up through all-time highs. So the Russell 2000, the small caps, they are where the action is right now. I would continue to watch them for leadership. But small cap seems to be where it's at. The Dow, not so much. Dow is kind of really the laggard of the 4 that we've looked at here. Again, these orange lines are pivot lines that I've drawn for you. This pivot line actually tried to hold up on Friday, but failed today. For whatever reason, we closed back below this orange line. So we're kind of down here in no man's land on the Dow. But again, this is just a short handful of older stocks. They're constantly moving older stocks out and moving in newer, more relevant stocks into the index. But for whatever reason, the Dow, or the DIA in this case, is definitely lagging the rest of the ETFs, the indexes, whereas small cap is strong and technology is strong. So in the bigger picture, the bigger scheme of things, would be nice to really have this day's low dig in and be a low to move higher tomorrow. And if that's the case, then we're probably going to come up here and assault these levels, 280.50, we'll call it for rough numbers, in the S&P. Some of the things the market was nervous about last week, was Italy. This was a really bad day, and the market was a little spooked looking at Italy's credit default swaps and junk bonds, or whatever you want to call them. The yields go up to try and attract buyers, but we seem to be kind of out of the woods technically there for the most part. A lot of people are watching the Europe banks. Deutsche Bank, not really looking that great. Deutsche Bank's a giant bank with a ton of derivatives, and so this is really one to keep an eye on. I think people should keep an eye on this. It's not really showing that it wants to do anything. This is a horrific downtrend compared to KBE. This is our banking ETF. Little different story here for the U.S. banks versus like the big one in Germany. Put it up again, Deutsche Bank. So, keep an eye on Deutsche Bank. Keep an eye on CS. Credit Suisse also looking pretty ugly. Tickled a new low today, but popped back up. I think that could be where the concern lies this week as we enter this week. Keep an eye on those European financials. That's kind of what I think the market could be spooked on, but otherwise, we just need to see these spiders dig in and create a nice higher low and bounce off that 20 and make an assault up here to this next pivot line. And that's pretty much all I have in terms of observational analysis today for you, Jamie. I'll talk some more about it tomorrow during my webinar.
Good stuff. And hey, it just so happens to be Credit Suisse. XIV was their baby, I believe. I'm pretty sure. Yeah, XIV was Credit Suisse. So to see those banks doing what they're doing, no surprise. We might see some more implosions. Who knows? We've all got a front row seat, though.
DB Deutsche Bank's the big one. They got a ton of derivatives, probably more derivatives than people even understand. So when those things unwind, they can act really squirrely. So I'd keep an eye mostly on DB.
Yep, that harkens back to the days of, remember when Dell got into trouble trying to do derivatives? I think it was in the early 90s, right? You remember that? Anybody?
I do not. No, I don't. Sorry.
Yeah, Dell thought they'd try their hand at derivatives, and they took a big whack. And you would think that people would have learned from that, but no, they didn't. They just went more and more and more into derivatives and started creating more and more of them. And of course, now we get to see what happens when those things unwind. So, yeah, should be interesting moving forward.
Usually not pretty when they unwind, but we'll see.
Oh no, bets on top of bets on top of bets that have all been sold off, and anyway. Not to get too far down that rabbit hole. So let me grab the helm here one more time. Okay, Steve, you got eyes back on?
I do.
Okay. All right, ladies and gentlemen. So thank you very much, Steve, for that analysis. Of course, Mondays sometimes start off with a bang, sometimes a whimper, sometimes kind of right in the middle. Kind of seems like that's what we had today, because just to pull the big SPY back up here, we had this nice little gap down to the tune of about, I don't know, what was that, 1.5. We closed 277.03, open today 275.49, so a little over about $1.50 or so. But kind of got mixed signals today, because we've got the nice juicy gap down to start the day. And then, of course, if we look right here at my expectations, we had a substantial downside count on my compare count windows, and I'll just kind of pull those over from my Twitter feed earlier. This is 15 minutes after the open, looking at things in the SPY, hitting lows in the first 15 minutes, having accelerated volume, and then the big board, or just the big guys across the board, 4 billion market cap and higher, hitting highs and lows with accelerated volume. So we had 60% here, 68% on the SPY components with accelerated selling, on top of the gap, right? So, these metrics today were kind of more or less negated, because what did we have? We had this little, bottoming pattern here, and then just boom, 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 and eventually I don't think we quite filled the gap. We got pretty close. But not quite. Maybe 90-some-odd% of the gap was filled. So mixed signals today. Gap down with big selling in the first 15 minutes, and then what do? We kind of jerked back up here. So whether you were short, looking for shorts, looking for longs, there were some trades out there that worked today to both sides, but boy, it sure wasn't easy finding one, not from where I was sitting anyway. One of the things that did give me a little bit of a heads up earlier in the day was seeing Holly Neo, which, by the way, we've all got our favorites that we like to watch here, and of course we can keep our eyes on all three AIs today, or now in the channel bar up here. But one that got the lead early and started to get some traction, and by the way, the one that I've been watching just because it's the one I feel like watching, no rhyme or reason to it, is Holly Neo. So we're going to take a look at all the Holly trades today, but what I want to point out, as far as finding something that makes sense, that may not really jive with what we think might be going on, once again, getting back to these guys, we had heavy sell readings in the first 15 minutes, but then boom, we got the reversal here on the SPY. So that's why I found it very interesting today that Holly Neo, up until the last hour, we can see here that these longs, these three longs, were all power hour longs, which were generated in the last hour of the day. But up until that point, Holly Neo, boom, talk about a short bias, boom, 35 minutes after, 5 minutes after, and then just a slow, steady uh, barrage of shorts here that got Holly Neo going today. By the way, this is the one that showed the most P&L today, mainly on the short side. So we talk about this all the time here. When we see Holly get in the money, of course, sometimes we take a little drawdown here, but as these marks here, or these lines, and I sure wish maybe at some point in the future we'll be able to mark these charts up, because once Holly sets these little baselines here, gets up, sets a higher high, we can key off of these charts. We see Holly gaining traction, backing off, setting a little higher highs on her intraday P&L. So right off the bat today, regardless of what my human brain is thinking, going, well, short might not be the right way today because I see the SPY's not going down anymore and we had the big gap, we might snap back. So a lot of that head trash was floating around, not only in my head, but I'm sure a lot of other people's out there today. That's why we have the beauty of statistics here, because regardless of what we were thinking, with this gap being, partially filled, take the little pullback and then fill the majority of it, but not quite the whole thing, that does not negate the fact that the most profitability from the AI family today was on the short side, on Holly Neo. So let's take a look at some of the short trades here. Right off the bat here, we've got CBIO with just a humongous spread between risk off and risk on here. And so what we like to do here is address risk on and risk off on a trade by trade basis, not being of the mindset to where we go, okay, what am I going to pick today? Risk off or risk on, right? It's a trade by trade basis, the way that we can make the most sense out of going risk off or risk on, or maybe doing a little bit of both. All right, so I saw some action on the questions panel here. Looks like Steve's knocking them out here. Tony, if you're talking about the default layout up here, this is just the ability to have your default layout in the, and I would click on it right here, but I don't want to mess up my layout.
Just a placeholder for a coming tool, Jamie, basically, or is it not ready yet?
Right, and this is the latest version. I just upgraded this morning, so I really haven't had time to play around with the functionality over here yet. But yes, this is where you're going to be able to park your default layout, and of course we've had a lot of users over the past say, I'd like to put my own layout up here in the channel bar, and this is the beginning phases of that. Okay, all right. Yeah, and we'll talk about the GME trade later on as well, Frank. That was one of the power hour trades. So let's take a look at this first one here, CBIO, which was generated from Downward Dog today. Downward Dog came into the session at 60.6% success rate. Spit out 6 trades, risk off, didn't perform that well, but it's looking under the hood here and sizing up this trade right here and asking ourselves, if we weren't in it, how would we have reacted to it? Hopefully there were some people in this trade today. So we can see right here, all of the metrics populate. Holly calls the short right here at 1160, and we get a little sideways action. Now keep in mind the stop is pretty tight here, the red line, and I'll try to stretch these out a little bit more, but it's just a pretty tight range there. So we can see the red line is the stop, never penetrated the red line to the stop. Of course, this is a short, so we're hoping that it goes down. Why did Holly get out on a profit save and somehow manage to lose 20 cents here? Well, we can see the little shaded area here. By the, she gets out, she decides to pull the plug. Why is she pulling the plug on this? Because it's not working, right? It's flat, going sideways for how many minutes here? 15, 30, 45 minutes. So that is the profit save and the reduced risk functionality. It's like a trailing stop with a little time decay factored in there. So the longer the position is open and it's not heading the direction, then the more likely Holly is to pull the plug, either take the loss early before it stops out, or in this case, profit save. Looks like a fast market, maybe could have been in play by the time she gets out, down 20 cents. But the bottom line is this. If we're in this trade and we're just getting some sideways action and our stop loss has not been hit, well, therefore the trade is working. We'd like for it to work sooner than later, obviously, but sometimes patience has to take precedence, right? Especially in a market like today where whether it was a long trade or a short trade, it wasn't that easy to find. Not that it's ever easy, it's just easier some days. But in this case, all we had to do was stick with our stop loss, give it a little bit more time, and eventually we just got a nice, easy, move down. Of course, what was going on in the daily over here, and we had a nice big gap down. If we're trying to figure out, how much room the trade might have in it, we can notice that it closed pretty weak. We're starting to butt up against this area over here, so tomorrow maybe this thing has a little bit more room, or maybe it's going to bounce right off of this little area of support, which used to be resistance. Exactly what Steve was pointing out earlier, looking at the ETF charts. So the bottom line is this: we didn't really have to sweat it out a whole lot in this trade. We could have peeled out a half with Holly and kept the other half, or we could have just said, you know what, we're sticking with our original stop loss. It's a very tight stop. Never got hit, and big difference. We got $2.33 here on the spread between where Holly decided to get out and what this trade ended up yielding. So nice big spread there to take advantage of, and just one of the ones that you had to be patient with today. All right, so GME, let's just skip right over to the last hour here. Pretty interesting play on this one. Things happen pretty fast and furious. So as far as getting the same price as Holly, probably definitely going to take a little bit worse of a price than Holly did on this one, 14.29. And of course, boom, this one just went kind of Richter here. Went all the way up and hit the profit target. So that was a power hour long. Holly, Neo in this case, did not see any long opportunity until that very last hour. And we can see here, she had a pretty good mix of longs versus shorts, but until that very last hour, not even one long was triggered in her other strategies. All the Hollies had a pretty smaller trade strategy count on this session as well. Okay, so moving right along here, another good short that was produced where there was a pretty nice spread, about 49 cents in here between what Holly took on risk off and what risk on yielded in the end. And we can see right here a nice clean entry at 63.17. Pretty pain-free trade here. Now, what I noticed is that the stop was pretty juicy on this one. And of course, if we look at slippery slope, well, just as the name indicates, a slippery slope, a little bit riskier of a trade. That's why this one is using a 4% stop loss. So we'd have to really compress the chart over here. I think we still can't get it to show up on the intraday, but we can easily look over here on the daily and see the top of that range right there, right? Acting as the stop loss, right? Little area of resistance. But in any case, never really had to worry about that stop loss because this thing just pretty much marched down as soon as Holly made the entry. And Holly, not being the best at exits, remember, her strong suit, her superpower, are the statistically charged entries that she brings us. But in any case, 27 cents here is what Holly takes. We're still in a downslope when she plugs out of it, and timed exit. So she's just going to blindly follow her rules, get out on that timed exit, slippery slope. If we take a peek here and you want to see what that timed exit was, that one's designed around a 45-minute hold time here. So whether we play the 50-50 game or whether we're just like, hey, this thing's done nothing but march down since I've been in it, I'm going to keep the whole lot, or, to hedge your bets a little bit, this would have been a great one to go, all right, I'm taking half with Holly. I'm in 200. I'm going to peel out a half with Holly, take my 27 cents, give the other one some more risk, and you could have plugged out anywhere between 50, 40, 30 cents better. and added to that position or made more money than what Holly is showing on risk off. And over time, whether it's a dime, a nickel, a quarter that you get out of this spread here, it really does add up over time. So these are the examples on Holly Neo today as far as risk off, risk on. I don't really see any good trade around opportunities that had stop outs today on Neo. So let's go ahead and take a peek at the second best performer today, which is the original Holly, otherwise known as Holly Grail. And wow, somebody was certainly on a diet today as well. Now let's see, hold on one second here, because I swear, go back to this one real quick. Yeah, okay, they all picked it up pretty good for a long time today. One only had one, but okay, let's go back to the first one. All right, so the original Holly Grail, wow, you know, on this one, the biggest, you know, most of the money came today from a long. So whereas Holly Neo, all short, most of the cheese that was generated today on Holly 1.0 was from the long side. And, you know, right there in the middle of it, only 30 minutes in, while one Holly was going nothing but short, this one was like, you know what, trip looks pretty good from a statistical standpoint. Of course, what I really like about this one is the daily as a little bonus point here, but very nice clean entry, nice on this wick bar right here. Acts like it's gonna stop us out, doesn't quite get down to the stop level, and then we just get some traction and head on up. Of course, the added benefit here is what's going on over here on the daily. Not only do we have a Holly play over here that's working, and a long, mind you, but it's starting to break out into what appears to be all-time highs. So this one actually might be a good one to keep an eye on tomorrow if we don't have too big of an open or they don't gap it up too much. If we get a little open somewhere in this little bar right here and it's not too, you know, stretched out, might definitely be one you want to keep an eye on for tomorrow, the good old trip. Of course, Holly has been active in this one in the past. Had a sell not too long ago, way back here. Of course, it worked for a few days, and then boom, got out of this level as well. It's just been off to the races ever since then. So really, this is the only one to showcase out of the original Holly, which leaves us with Holly 2.0. So Neo, all short. Holly 1.0, one trade, long money. And then today, we just kind of had a mixed bag here today. Now, CVNA, stop hit. This could be a good example of a trade around here. So Holly gets short right here, and what do? We quickly take a little bounce up, it stops us out. What happens then, right? Stopped us out, we come back down here, we have a second attempt at this entry level. And, you know, hey, guess what? Second attempt gets the job done this time. So whether you were in this one with Holly, took that stop loss, or whether you just happened to look and go, and it's always a good exercise to get into. You might be watching one Holly, you get a little break, a little lull in the action. You go to the other Hollies. You look for the ones that have either been stopped out or are about to get stopped out or are significantly out of the money, and just simply set that price alert so that the second time it punches through that level, you're alerted to it. In this case, it would have just been, you know, right-clicking right on the blue line, setting that price alert, short, the price falls. That way, when it comes back through, you get alerted to it. You can take a stab at the second entry if everything looks good. You know, this is simply an issue of timing. Statistical probability is always there, but it's the timing, right? Sometimes we get stopped out barely, we got a little bit above that stop loss level right there. But on the second occurrence right here, we did get some nice follow through. That's why we're seeing the stop hit, and then of course it ends up working and generating Not a bad little profit there. So this would be a good example of a trade around. Once you see Holly out of the money or the stop triggered, we want to look out for that second, sometimes third or fourth. You know, sometimes they'll hover over that line. But in this case, after that second penetration, it was off to the races here. All right, so Steve, I see you're still doing a good job there, answering the questions that come through. Yeah, and the short float, Frank, that's one of the kind of the shiftier metrics because we rely on our information provider, and that's just a metric that doesn't get updated all that frequently. You would think that in today's computer-generated environment that we live in, that they would somehow make that process more efficient, but that's a market, that's an inter-market workings type thing. But I think you, me, and everybody else would love to have that updated more quickly. It's just they've got some antiquated ways of reporting and keeping track of all that. All right, so that pretty much gets us through Holly today. Now, I will say this, on a day like today where, you know, we had mixed signals and decent longs and decent shorts, although they were not the easiest to find today, you know, a total of, what do we got here, 440 and about 5 points generated through the 3 AIs today cumulatively. All right, so still nothing to sneeze at. Majority of that was to the downside, and then we got things like the GME. Now, somebody said something about GME being halted earlier, but I just want to take one more look at that one. So it blew right past our profit target here, and then, you know, retraced and then came back up here. Now, I'm not sure. So Frank, you're saying right when it was triggered by Holly, then they halted it briefly. Interesting. Okay. Well, wonder why they halted it. Doesn't really look like that big of a halt there, but I'm sure they have the reasons. Probably just the order book got out of whack a little bit, and they had to let it catch up. But in any case, that pretty much gets us through Holly today. We'll see what happens on the morrow. And as Steve was pointing out, what have we had? We've had some nice green down days, which, who knows, you know, after Friday, and we tried to close that gap on Friday, you know, we got about halfway through and then just couldn't do it. No big surprise to see that, you know, we gapped down today. I kind of thought we'd push on down to these levels. So, you know, that still makes me a little leery here. Who knows? We might just march right back up tomorrow. We'll get weak. Maybe this is a good little level down here to start getting long. So we'll see what tomorrow brings. All right, let's do a little time check here. 240. All right, perfect. So, as I was saying earlier, not real easy to find good long trades. Not real easy to find good short trades today. In some of my bread and butter high volume windows, like my turbo breaks up and my turbo breaks down, as always, a gazillion symbols coming through here, but very difficult to find good timing on the entries today. What I mean by that is, you know, lots of good chart patterns here, but the timing was off on all of them. You know, if we started looking at the turbo breaks about 7 o'clock in, which is about 30 minutes in, what we would find is, yeah, they're all hitting lows, but those were the bounce points, right? They were all starting to bounce there. There was no nice flat line with a break to the downside and a nice cuddly entry with decent risks. They were all stretched out. Nothing made sense. All the entries on the long sides today, the volume wasn't there until way after the break. So the timing was extremely hard on a lot of the trades that I look for today. Having said that, a little window that Andy put together not too long ago, bullish daily candlesticks, did produce some very, well, they worked right off the open with minimal risk. Now, they didn't just knock the socks or the cover off the ball today, but I still feel compelled to show you guys what was produced because, well, it just looked really good and the risk was indeed low. So where'd my window go there? All right, give me 1 second here, guys. My window has decided to leave me, but fear not. We can respawn like so. All right, so once again, this is a window that Andy put together not too long ago, and it's been producing. You know, I'm starting to like this window more and more. The more I watch it, the more I interact with it. So let's take a look at what we had today. All right, just making sure I'm on the right day and time here. We get the 18th. Almost there. Oops, nope, went too far. Okay, there we go. Now there's one that's not showing up though. Okay, there we go. All right, so take note of the date here. This is just in the wrong spot. That's why it's throwing me off. So here's today. Here we got the first couple of guys out of here. PBI, nothing really happened with PBI or CMC, but then we have something like D now that comes out, bottoming tail, right? So what does that mean, bottoming tail? Well, this is looking at closing daily candlesticks. So when we look at the daily, what do we have? Let's see here. We had this bottoming tail the day before, and of course, what do we have this morning? We had a nice wide range bar.
The running of the stops. That's what you had.
You know what that is. You know what that is. Of course, since this one is looking at a certain alert, more importantly, new high, we didn't get the alert till after all this malarkey was over with here. And, you know, the good thing about this typically is we can use this as our stop most of the time. But of course, we're looking at it after the fact here. Bottom line is that we get a nice entry signal here and then a move higher. Now, for some reason, one of these is not showing up. And I'm just trying to figure out why it's not. All right, SVU, I thought it was showing up earlier, but okay. And we have the same thing with SVU here. So once again, we've got that nice bottoming wick. This one stayed in line a little bit more, didn't actually pass through that low the prior day. And we get a nice clean signal right here. Just happens to coincide with a couple of other metrics that I like, which, you know, 15-minute bars here. Take a little break here. It's like a little mini flag. And then we get a nice entry here and a move higher. Now, of course, these, along with many of the other ones that I saw today, there was not a whole lot of continuation in many stocks out there. We had a nice little run up, and then if you didn't take the cookies, you know, you weren't looking at near as well of a profit. So it seems to be the, you know, the case with the longs today is not a whole lot of follow through. And surprisingly enough, some of the bigger follow throughs were on the short side today. So once again, very mixed bag here. So we had SVU, D now, and JEC. That's the one that all of a sudden I'm having trouble finding. There we go. Okay, and you can see here more of the same stuff. We get a nice entry right here. We get a push to highs. We get the pullback. This one actually ended up retracing back to the tops, but a lot of the ones that raced up here and peeled back never saw those highs again. So, you know, you might want to start watching the daily candlestick patterns and getting used to keying off of what you're seeing on the prior day here and using that as your stop loss, because, well, you know, I've been a short-term guy most of my trading career, but I'm becoming more and more comfortable with the daily candles. It's a whole new world. It slows things down a lot, and we've got these pre-made lists, so we might as well start tapping them. that's kind of what led Andy to create this window. It's like, hey, well, we've had these lists for the longest time, we just haven't been utilizing them. So this list is pointed to the list that our server generates at the end of every trading day. So, you know, obviously the day has to wait, or it has to wait for the day to close. Now it's identifying all the candles that could show up, and you can see here we've got these predefined lists. So that's what all of these strategies in here, and there's 3 of them that are active right now. Green bar reversal can be activated if you go ahead and click it. You can get this window from channel 4 just as you can any of the windows that Steve and Andy and I have created. And of course, right down here on the channel bar is channel 4. If you click on it, that's all of our favorite windows. We used to distribute these in the cloud formats. The cloud links kept busting on us, so we created channel 4. So if you want the bullish daily candlestick window, just go to channel 4. You can right click and save it to your cloud and start watching these guys.
Frank wants to know real quick that daily scan. Do we have engulfing candles in there? I believe we do, but we'll take a look.
Well, let's just take a look at the list.
Yes, go to the daily list, exactly.
Yeah, so we go in here. Where's my dailies? There we go. Okay, so daily. We got bearish engulfing, we got bullish engulfing.
That pretty much covers it.
So just add these guys, click on them so they'll show up over here, and then you can start running some scans on those daily.
Remember, the best time to run those scans, though, is in the morning pre-market, because it takes all evening to get those to populate. That's what's happening overnight. So best time for those particular candlestick scans will be pre-market.
Yep. So, you know, in the morning, everything's been done. You know, you might be sitting there waiting all night going, well, is it done yet? Is it done? Like Steve said, you might as well just wait till the morning, and that way you know everything is done. All right, well, just looking at the itinerary here, I think we managed to get through everything. Like I said, kind of a strange Monday with the IWM going up and everything else being red and the gap down and blah, blah, blah. So let's see here. Is there a scan you guys did? Well, Frank, we haven't pointed, you know, this collection of strategies is not pointing to the engulfing, right? But you could easily duplicate one of these strategies, reinsert it into this window, or make a standalone window. Pick the alert, because, you know, you have to pick the alert that's going to accompany these guys, any filtering that you want. But once again, define the daily.
Or you could do a top list, but most importantly, Frank, is what he's doing right there.
Right. So let's just walk through a quick example here. Let's say I want to spawn a new top list, and I want this just to be my bullish engulfings or whatever. I'll just blank that out, symbol list, or since I've already added it, we'll just do bearish engulfing. Make sure we're here. We don't really have any filters. Okay, so these are the ones from yesterday, right? So if we started going over all these stocks right here, wait, which one did I point to, Steve? Was it bearish engulfing?
One of the two.
Yeah, so bearish engulfing. And of course, I haven't really, you know, that was yesterday. It's looking at Friday's.
Right. Yeah, the reason I said top list is that you don't have to come up with an event. You don't have to come up with a new high or a new low. You can just monitor all the ones that you happen to like. Of course, you can put filters in there for volumes and average dailies and things like that. But I would think that the candlestick patterns work best in a top list, in my opinion.
Yeah, and the interesting thing is, you know, I didn't put any filters. I'm looking at all markets, and these were the only ones. See, that's a finite list right there. These are the only ones that our system identified with bearish engulfing on the daily. So not that many, right? So, you know, we could go to filter, but as soon as we start putting on some, you know, pretty vanilla filtering, this list would probably get a lot smaller just by adding, you know, hey, let's add a max price. Let's add volume on a 5-day of 200,000. And then boom, we get a lot smaller here. Of course, I'm just not showing any columns, but probably a lot more on the bullish engulfing side as well. All right. Looks like we are pretty close to quitting time here. If anybody has any specific questions about what we've discussed today, by all means, we got a little bit of time here. Just reading your question, Richard. Trade of the Week webinar. Okay. Let me show you where to go to sign up for all the webinars.
Yeah, the Trade of the Week email is a little different than the actual Trade of the Week webinar, I believe. Maybe I'm wrong. We're going to find out.
So to sign up for the Trade of the Week webinar, we cruise down here to the bottom, and we go to webinar.
There it is.
Info. Okay. So this is where you can sign up and register for all of the 5 o'clock Eastern webinars, right? Now, the TI University, Steve.
That's in support.
Right.
In the first drop down, the very top one.
Click right here. And this is how you sign up for the TI University Monday through Thursday webinars. And these are the ones that start at 9 a.m. Pacific Standard Time, noon Eastern Time.
So there may be confusion. Signing up for the Trade of the Week to get the Trade of the Week Monday morning pre-market is not the same as signing up for the Trade of the Week webinar Tuesday evenings. So maybe there's some confusion there. Just putting that out there.
Right. And signing up for the Trade of the Week is easy. Steve can provide you a link with that, or I can. You just put your name on the list, but that is completely different from signing up for the Trade of the Week webinar, which you do from the website.
I'll drop a link into the chat window, which takes you to that webinars page, just so people can see it.
Perfect. That's a good question, David.
And Richard, if you could always search for it too in your email search, maybe search TOW or search Trade of the Week and see if it did sneak in there by chance, just to make sure it didn't go to another folder.
All right, ladies and gentlemen, we are at the end here. So, Scott, if you're ready to tell everybody how they can save some money upgrading or signing up for the first time, I think they're ready to hear about it.
Yeah, thank you. Sounds good. Get that up. So we do have a podcast, and we usually release episodes every week, so make sure that you're ready to get the next one. Just search for Trade Ideas Podcast inside whatever application you use to listen to your podcast. It'll pop up, hit subscribe, get the latest episode, and you're set. And when the next one gets published on Friday, it'll show up for you. We have a discount code that's good for this month, and it is Holly Summer. You need to use it all caps. It's case sensitive, and that takes 15% off your first month or year of Trade Ideas. Subscribers wanting to upgrade from standard to premium can also use that. Just log into the website, go to the home page, log in the upper right, and once you've logged in, then you can select Change My Subscription. Use that code when you're doing it, and save 15% off your first month or year of your upgrade. Any questions, email us, info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader, and there's some other handles there too. Facebook.com/TradeIdeasPro is where to find us on Facebook, so you can follow our page and share everything we post with everyone on your lists. Thank you, Steve and Jamie. We'll try and have a recording of this up later on and give you a heads up about where to find it tomorrow.